Thank you very much. My name is Michael Williams. I'm the founder and executive chairman of Aftermath Silver. Aftermath Silver is based out of Vancouver, Canada. The goal of the company when we put it together several years ago was to acquire silver dominant assets that met certain criteria. And the criteria was we wanted to demonstrate that we could produce 7 million ounces minimum of annual silver production for a minimum of 10 years. And we also wanted to demonstrate that we could do it at $17.50 silver. We've made 3 acquisitions. I think 2 of those 3 meet that criteria. And our flagship is the recently acquired Barangila project in Peru. So we have 2, and the other criteria that we had, we wanted to make sure that our projects would be amenable to open pit mining. And in all 3 cases, I think we've accomplished that. So the key projects are in Peru, Barangila, which we acquired from SSR Mining last year for $15 million spread out over 72 months. And the Chaya Koyo project, which we picked up from Mandalay Resources for $10 million spread out over 48 months, and Mandalay had put in approximately $33 million into the ground and for acquisition, so it was done on 30 cents on the dollar. We have a significant copper resource at Barangila. We have 45 million tons grading 0.7. The silver is 120 million ounces at Barangila, grading between 80 and 104 grams per ton. The ore body is open, and at our 3rd project, we have 20 million ounces at the Cachanel. We think we're undervalued when you do a cost per ounce basis compared to our peers. We're in the bottom quartile, but I think for quality of ounces, we're in the top quartile, so we have some room to go there. Share-wise, we have 135 million shares outstanding. Our largest shareholder is Eric Sprott, who's approximately 19.3. We have an additional 20% of the holdings are made up of institutional holders in Europe and North America. And we recently did a financing last year of $17 million at 70 cents with no warrant. We're currently trading at about a $60 million market valuation. Other than myself, Ralph Rushton is president, CEO, and director of the company. Ralph's a former Anglo-American geologist and has also spent 15 years working with fellow junior companies in Canada. David Terry is a director of Great Bear Mining, which has recently made a large discovery in the Canadian North. Michael Parker is a former First Quantum country manager and Latin America manager, and also a Peruvian citizen. And then Keenan Hohoy is a former general counsel for BHP and also for Pan American Metals. Peter Valgaris, our advisor, was the technical services manager on the Oyu Tolgoi project for Robert Friedland in Mongolia. He did all the underground pre-production development, and we recently brought on Victor Grande from the World Bank to do the community relations in Peru and Chile. So Barangila, historic resource, 98 million ounces of indicated, measured and indicated, 28 of inferred. The deposit's open. It also contains, as I mentioned, 45 million tons of copper at 0.7. At Chaya Koyo, we have 35 million ounces of measured and indicated and a further 11 million ounces of inferred. We believe the potential at Chaya Koyo is around 80 million ounces with the goal to mine on our best 6 million ounces, minimum of 10-year mine life. Deposit is open in every direction. And Cachanel, it's a smaller ore body, currently at around 20 million ounces. We're looking to monetize it, and we think we'll be selling it sometime in 2022. Developments at Barangila, we're working on our metallurgical work. We believe we've de-risked it from a geological point of view. There's enough ounces and tons at Barangila to have a mine. We will be going to copper cathode, producing it with SXEW. Silver dorés will be produced through the Merrill Crowe. What we don't know is we've got a significant manganese component, so we're working on the metallurgy to see how best to monetize the manganese. We would expect the CapEx on this project, and we're going to pre-feasibility study in the next 24 months, and I'll certainly have more concrete and defined answers then will be anywhere from $500 to $700 million. Just to give you an idea, the leverage that the Barangila project has to silver, this is just an internal number, but for every $7 increase in the price of silver equates to approximately $1 billion in free cash flow. So certainly highly levered to silver, has good copper exposure, and if we're able to demonstrate that we can remove the manganese and have a market for it, I think this is a potential company maker. Drilling is starting at the end of the month. Large focus will be on the metallurgical drilling for the manganese. Chaya Koyo has also started drilling. We'll be doing that in January. The idea is, as I mentioned before, is to expand the resource and also do met work there and begin our water evaluation. In Chile, it's always about water, and we have 2 desalination pipelines just to the north of us, and I think that's the new model from the Chilean government. Smaller companies tap into these big $500 million desalination programs. Flatlying project, it's a carbonate replacement system. It has a history of extensive work. The current resource is in the Australian compliant JORC category. Within a year to 18 months, we'll put it into the National Instrument 43101, and then in 24 to 36 months, we'll have completed a pre-feasibility study, and we'll have the answers on the metallurgy surrounding the manganese. We're using Asenco, the engineering firm, on that. Good infrastructure. It's located in southern Peru, 4 hours by car out of Arequipa, 6 kilometers from Railhead at St. Lucia, the local town that has a skilled mining force, and we can be at the port in less than half a day, and we're close to the power grid. I've touched on the resource there. It's at 4,200 meters, so it's not high Andes, but it's certainly not low elevation. We've got, as I mentioned, we're in Puno in southern Peru. We're close to Arequipa, 204 kilometers away, and we've got a railway loading station 6 kilometers away. You can just get an idea of the topography there. As I mentioned before, not high Andes, but once again, certainly not coastal. One of the key tenets of this project, why we liked it so much, it's a flat-lying structure. It comes right to surface. We think the strip ratio life of mine for this project is less than 1 to 1, which is optimal. And in the first 2 to 3 years, it's 0.3, 0.4 to 1. So from an engineering point of view, it's been de-risked. And from a geological point of view, with its current resource, it's been de-risked. It is open. We would expect to find a lot more ore. We're currently looking at a 15-year mine life now. We don't see any reason why it won't go to 20 or 25 or perhaps even beyond that. So I've mentioned over the next 24 months, expect to see a PEA, perhaps a PFS. Drilling is starting now. We'll continue our marketing studies on the manganese, and then pre-feasibility is to follow that. Chaya Koyo, it's in northern Chile in Region 1. This is at lower elevation. It's off the Pan American Highway, silver gold epithermal project. Historically, it had 35 million ounces. We've taken it now to 45 million ounces. We expect to go to 80 million ounces, mine on our best 60. You can see the pink structure is the vein. We're going above it and going into the hanging wall. We expect to take it out through open pit with a life of mine strip ratio of 6 to 1. So I think that'll work. It'll work if silver drops below $20, as will Barangila, which was our original criteria. Infrastructure, as I mentioned, off the highway. There's some rail close by, there's power close by, and there's 2 giant water pipelines currently being made. Next 24 months, expect drilling. We'll be at PEA. And if you have any other questions, we're located at C6. Please feel free to stop by and ask myself or the CEO, Ralph Rushton. Thank you very much.